Hey, Dollars and Change listeners, it's Pete Krull. And before you listen to this next episode with Heather Beatty, I wanted to apologize to you because the audio isn't so great. We had an issue with two of the microphones creating an echo effect. We've figured out what the problem is for next episodes, but since I recorded this in California with Heather, I'm not going to fly out just to re-record this. So please bear with us. There's two episodes that had this issue, and going forward, we will have that fixed. Thank you for being a Dollars and Change listener, and we look forward to providing you with some great new episodes in the near future. Thank you. Hey, it's Pete Krull, and we are back with another episode of Dollars and Change, the expert's guide to sustainable, responsible, and impact investing. And I'm going to Los Angeles for the Future Proof Conference. But what's great about being in LA is I get to meet up with friends and colleagues. And today I'm with Heather Beatty. She is the founder and CEO of ScopeFour Capital. Welcome to the podcast.
Thank you. Thanks for having me.
My pleasure. I'm glad you're here. So we met last year actually at the Future Proof Conference.
That's right.
You were on a panel with Jeff Gitterman, who's also been on the podcast before.
I saw that.
It's definitely a small world in the sustainable investing world, I think.
That's true.
So let's start talking a little bit about you. Tell me about your background, how you got where you are.
Yeah, so I've been in the investment world for about 20 years.
Okay.
And most of my career up until about 5 years ago was just in traditional investing.
Okay.
And a lot of clients began to ask us about how we were thinking about climate from both a risk standpoint and also an opportunity standpoint. And our portfolio managers at the time were like, well, isn't that the same thing as ESG? We just hired an ESG analyst. And so there was a lot of head scratching going on, and that actually made me feel really curious. And I went on this journey basically to learn more about the intersection of climate and finance. I ended up actually getting an executive master's degree from Duke University in environmental management. At my last firm, it's a $130 billion asset manager. I launched the Climate Council, and I started to invest my own capital. I joined quite a few impact investment organizations and started investing both in public and private market strategies. But what I came to through all of that are a few things. One, particularly in public markets, so far there's about a little over $500 billion invested in strategies that are labeled climate. And the majority of them look just like the S&P 500 or the MSCI ACWI.
Yep.
And as I began to learn more, it began to be a huge head scratcher for me. You've got a multi-decade secular trend going on here, and you should be investing in the supply of decarbonization and not the what I call quote unquote the demand. So instead of investing in the Apples or the Microsofts of the world who are committed to net zero, don't you want to invest in the companies that are enabling them to get to where they want to go?
Right.
And exactly. Yeah. And we can talk a little bit about what I mean when I say decarbonization, but I'm also really an avid reader. I love to read about all kinds of random things, pick up books on like bees, and I started reading about garbage. I was obsessed with trash for a while.
It's a good thing.
I mean, I think it is.
Yeah.
So
we just did a podcast with a lady who's focused on plastic pollution.
Yes.
So that's a big part of garbage right there.
That's true. I should have asked her if she read the book Garbology.
Next time.
She probably knows more than.
She probably did. Yeah, it was a really good reporting. Anyway, we're here with you. Talk more.
So in all of my readings, I also came across a book. It's kind of like a coffee table book called Project Drawdown.
Yes.
And realized that it's not just a book, it's actually a full-on, a huge think tank and organization of scientists and academics dedicated to identifying the most impactful climate solutions that, if scaled, would actually eradicate the issue around climate crisis. And I said to myself, I'm a little confused why the investment industry in general isn't focused on these solutions and thinking about how to allocate to them across asset classes. And so that inspired me to launch ScopeFour Capital.
Excellent. I think one of the most interesting parts of Drawdown is women's empowerment is one of the biggest impactful strategies in the entire book.
That's true. Yeah, absolutely. Economic empowerment, farm holders, reproductive rights.
Yeah.
Yeah, absolutely. And education is really important.
Yeah, we've been really close working with Project Drawdown. Catherine Wilkinson, who was really integral in putting the book together, has been a friend and colleague for several years of Atlanta. So,
That's amazing.
yeah.
We have a relationship with their executive director, and we've talked to them a lot about how they want to interface with the finance community as well.
Right.
And so they're trying to educate the private markets community and also public markets as much as they possibly can, so that the languages that we're all speaking comes together, because we know that vernacular, in my opinion, is a huge issue when talking about addressing this.
Well, let's talk about that for a second. So, one of the things that I talk a lot about is ESG, is greenwashing, is I think related to what you talked about earlier when you said, why is Microsoft and all of these big companies like Exxon even is in a lot of the ESG
Right.
portfolios. I consider ESG to be just a less bad version of the original index in many cases. Let's reduce the exposure to fossil fuels from 4% to 3%. Hey, now it's sustainable.
So I would say that the E in ESG isn't the same thing as investing in decarbonization or investing in climate. And I think,
Break this down for me. I'm curious about this.
well, so to me, the E is just simply what's your environmental footprint as an organization, and everyone has an environmental footprint, and it could be around your water usage, or it could be about pollution, or it could be about waste, like we were just talking about, could be about your supply chain, so on and so forth. And anyone can have an E score for their company. To me, investing in decarbonization and climate is about saying, okay, is the business model in your company and the growth of your company tied to solving the climate crisis? Meaning, if I'm focused on building energy efficiency or the built environment, am I selling LED lighting, or am I selling better insulation, or building automation systems, or smart glass, or smart thermostats? All of that is actually going to contribute to lowering or avoiding emissions.
Yep.
And it's part of a business model and a growth model. Whereas, how I'm polluting, while that's terrible, even a climate-oriented company should have some sort of E-score, because
Right.
as you and I both know, not all climate solutions are created equal as it relates to how environmental they are.
Absolutely, and I think one of the points I like to bring out is that most, especially retail clients, want to own solutions providers. They don't want to own a company just because its E-score is a little bit less
Right.
than somebody else's. When you're talking about solutions, we're talking about from a decarbonization perspective, building footprints and different things like that. At the end of the day, they want to feel like they're contributing to making the world a better place. Not just less bad place.
Right. And also it can lead to stock price appreciation and profitability. And I think when talking about greenwashing, that's been a huge part of what you could call the issue is, right? Just because I have a commitment going out through 2050 or even 2030, it's not going to be that meaningful. And it also isn't helping capitalism. And I think that there aren't enough people in today's world that don't really believe in capitalism.
Okay, and so I think that there's a problem of sort of vision when it comes to how we think about investment, because I know when I started in this business 26 years ago, we didn't have this fast access to information. And so when we invested in a company, we invested in the company for the long term.
Right.
The more information, and I think the internet is one of the greatest inventions that we've had, but it's also at the same time that double-edged sword in that it's really shortened our perspective. And so instead of investing for a company long term, we tend to be more speculating on short-term profits, and that does not allow companies to necessarily make the long-term investments in clean energy or make the long-term investments in say, sealing up the envelope of a building that may not pay back this quarter or even next year, but might pay back over a 5 or 10 year period. Do you see that same idea?
Well, I think that there are more companies than ever that are part of what I call the climate solutions universe. So we actually created an entire framework of how we categorize climate solutions, and we came up with 6 different categories.
Okay.
And then, and underlying that, we identified just under 100 climate solutions that are both currently impactful, meaning it's not still in prototype phase and it's ready to be scaled, which is really important for public companies.
Yep.
And then also economically viable. And we used keyword search and algorithm to create a list of 3,000 public companies. I mean, that's a lot. And I think it's more than what people think it is. It's 3,000 global public companies that are all tied to climate solutions or decarbonization in some way, shape, or form. And that's anywhere from, of course, renewable energy and climate tech, like you would think of, to the building environment, like we talked about, to what we call sustainable ecosystems or nature-based solutions. And then also the circular economy or waste.
Nice.
Yeah.
Well, let's talk about circular economy.
Okay.
What are some opportunities that you see in circular economy? 'Cause I know. So when I started this firm, one of the people who was sort of an inspiration was Bill McDonough.
Yes.
He wrote the book Cradle to Cradle. I spent an afternoon with him.
That's so amazing.
And it's just between him and the work I do with Melissa, my wife, it's sort of started me down this path. But I've always had a through interest in circular economies, but from a public markets perspective, it's about consumption, it's about producing, consuming, and producing.
Yes.
Consuming, trying to close that loop has always been a really difficult process. What do you see in that?
Yeah, I think it can be anything from better refrigeration. If you just think about food waste, actually 20% of US landfills are filled with food, which creates a lot of methane.
Yeah.
And so, and part of the reason why so much food goes into the landfills is because they aren't refrigerated properly.
Gotcha.
And so there's the solution around that, and there are companies that are working on better refrigeration. And it's just, these aren't things that people are thinking of from like a supply chain perspective or a granular perspective. There's also a ton of regulation actually coming out of Europe right now. And so we own a commercial recycling company out of Europe because you have to, as a corporation, recycle a certain amount of your waste now. And it differs depending on the jurisdiction within Europe. And so that's going to contribute greatly to just in general commercial recycling, I think, all throughout Europe. It's a little bit more complicated here in the United States, as you probably know. Just think about plastic waste.
Right.
It's not really getting recycled. We used to ship it to China, and China refused to accept it anymore. And a lot of it was just getting dumped into the ocean anyway.
Yeah.
But what I am seeing is there are also a lot of innovation and private companies that are doing better from a bioplastics perspective. And I think that's going to start proliferating or kind of coming up into the public companies or being acquired by some of the VC corporations.
Right. And obviously
They're the arms of the public companies as well.
Right.
Yeah.
Yeah, like Google's been a big part of that.
Exactly.
And it has to be scalable, right?
It has
At the
to
end of the
be.
day.
Yes.
And so, scalable circular economy.
Yes.
I would love to see that because it just makes sense. Why would we produce something just with the intent that it's ultimately going to end up in a landfill?
Yeah, I agree with that. I mean, another way to think about circularity, and people talk about this a lot, obviously, is with battery recycling, which is extraordinarily important on the EV side. And of course, we're having a huge amount of demand for what we call green metals, and that includes lithium, so on and so forth. And I'm sure many of the readers are aware of what's going on from a mining perspective and the lack of regulation around that.
Right.
But I think that the technology is getting better and better in terms of battery recycling, but it has to start where the battery itself is being produced, right? Because if it's not set up to extract these metals, then we're not going to be able to keep them. It's all going to end up in the landfill to begin with. And so at the end of the day, it starts with the supply chain. And then I think that it's going to contribute to throwing less things away, if you will. we have a finite amount of resources, so we have to be thinking about
We
these
have to be
things.
thinking
Yeah.
about it. And, and the reality when it comes to batteries especially is that the technology continues to evolve.
That's true.
And so maybe 5 or 10 years from now, we won't need the cobalt.
Yes.
We won't need the lithium. Because we're going to see this rapidly move forward. So we'll keep our fingers crossed on that.
Absolutely. I keep getting all these articles about the Salton Sea.
Mhm.
If you're familiar with it,
Yep.
it's a huge area for lithium,
Yep.
and it's
Yep.
kind of a disaster right now.
Yeah, and it's where you run into that problem where we need to electrify and get off
I
of
do.
as fast as possible. And the only way we have is the technologies we have right now. And unfortunately, we're stuck in this quandary. But what's our biggest issue that we're running into right now when climate change is hitting us and hitting us hard? There's fires. I don't know what direction the West is from here, but
San Bernardino, yeah.
pretty good fires that are happening here in California while I'm out here. So it's it's a scary time too.
It is. I actually drove by the fires on my way north earlier this week.
Mhm.
It was pretty exciting. I actually thought initially it was a good sunset, and I realized no, that's a fire.
That's a fire. Oh man, that's an awakening.
Yeah.
Wow. Let's talk about ScopeFour a little bit. The genesis of that. Obviously, you said that you came out of the traditional investment industry. You started to see, hey, the writing on the walls here. Why aren't people doing this? How did you get where you are now with ScopeFour? I know you're just still getting your legs under you, if you will, with it, but I'd love hearing your philosophy about the different decarbonization technologies. I want to hear more.
Okay. So we are specialized. I think that specialization is really important when focusing on the energy transition.
Mhm.
And all we do is invest in companies that are scaling climate solutions in public markets.
Okay.
We can talk a little bit about the 6 different pillars if you're interested.
I would love to. Yeah.
Okay. I think actually it's really important to note that all of our portfolios are focused on merging, having an impact, and also growth and profitability in companies. So we're looking for a catalyst, and oftentimes it's what we call a climate solution catalyst in each one of these companies to purchase it. Because I think that's been a huge disconnect in a lot of other portfolios. It's like, where are the revenues coming from? Are they material to the company's business? So even if, let's just say you're focused on decarbonizing data centers, which is a huge theme in our portfolio, in addition to several other things, is it either going to become material over a short period of time to the company's revenues and growth and profitability? And if not, can you really call it a quote unquote climate stock? And in our opinion, the answer is no.
Right.
There are also a ton of companies that are dedicating billions of dollars to R&D, and companies that you wouldn't even think are really transforming into more energy transition or transition readiness type companies. Like, for example, Hitachi in our portfolio, it's got $8 billion, all focused on decarbonization, train electrification, wind blade recycling, which is really important, drone afforestation. And so I think a lot of institutional investors particularly think of private markets when they think about investing in, let's call it, energy transition funds. And then at the same time, if you just think about an $8 billion R&D portfolio, that's huge, right? That's huge relative to the private market. Yeah.
Exactly. Yeah. So
we're all about scale at the end of the day. And I know that we still do need technology, and that's important. And also 2/3 of all the technology that we need to solve this problem is already with us.
Right.
And so it's about thinking about, okay, how can we allocate capital wisely? Where are economies of scale? And there are a ton of companies that are doing that. So going back to the 6 categories, we talked about renewable energy, which I think is what a lot of investors think of when they think of the energy transition. And it's anything from hydrogen, which we can of course talk about, and nuclear, of course, onshore, offshore, wind and solar, residential and commercial. And so I think everyone thinks about that, and it feels very like one note.
Mhm.
Whereas we're looking at kind of the holistic picture. So it's,
We try to do the same thing.
yeah.
Yeah.
It ends up being more diversified of a portfolio, right? And because not all things are working at the same time.
Well, we certainly have seen that in the clean energy returns since 2020.
Yes.
They have just been absolutely abysmal. And
Yeah, more since like 2022, I would say.
yeah,
Yeah.
2020 really pushed us to probably unrealistic
Yes.
pathways.
It's a bubble.
Yes, and then we went through 2021. It didn't really do much, and then 2022 and 2023 and 2024 for the most part have not necessarily been super profitable for it. But at the end of the day, one of the statistics I saw over the last week is that in 2024, I believe it's 96 or 94% of all new generation capacity in the US was either wind, solar, or batteries.
That's amazing.
And so, if we're looking at this from a long-term perspective, um, everybody talks about buy low, sell high. This is one of those buy low times.
Yes, exactly.
It's just harder to actually, flip that switch when it comes to buying low, as opposed to when everything's already on that upward cycle.
We actually just wrote a paper about exactly what you're talking about how valuations are amazing right now, not just, I mean, kind of across the board. If you look at year to date, how well the stock market has done in every single sector other than renewable or clean energy, it's up, like starting with technology up 20-30%, and then clean energy is the only sector that's down. So valuations are extraordinarily depressed relative to history. But then if you look at the actual underlying companies, earnings growth looks really positive. And if you look at some of the companies that are tied to the grid, for example, and not all companies it's not one size fits all, which is why I think that it's really important to have an active investing approach in this type of segment. But it's extraordinary because we think that we're in the middle of a capital expenditure cycle. And if you look at CapEx spending specifically on green CapEx relative to just traditional, you'll see that as the cycle is coming to a close for the next 12 to 36 months, those companies will dramatically outperform traditional companies.
Yeah. I hope so. I think that's where we're at now. Of course, we're filming this in September, so you're probably not going to see this for a couple months still. But I don't think that we're necessarily going to change anything over these next few months here. So when it comes to the clean energy investing, obviously talk to your financial advisor, or financial advisor, talk to your clients about it. But I love the idea that we're in a position now where it certainly is a buy low time.
It is. And I don't think that we're going to have to wait to 2030 or 2050 for these companies to realize. So I do think that this is a really interesting time. And I think it's also important to distinguish between what's going on in the media and sort of the noise and even some of what's going on from a politics perspective, and take a step back and just think about the velocity of commitments that have been made. So 5,000 public companies have now committed to net zero, and that's up exponentially from where it was just 5 years ago. And the same thing with countries. It's now 140 countries that have committed to net zero, which is up, I think, 72% from just 5 years ago. And so each country is trying to figure out what the best way is to approach this problem. And so to me, kind of going back to the supply demand conversation, demand is going to continue to proliferate, and there are so many areas, including, EV, so on and so forth, grid, that where you can really benefit as an investor. So sustainable ecosystems, a lot of people are calling it nature-based solutions today. So it's how we're thinking about water, how we're thinking about forestry, sustainable forestry, and also agriculture. I would love to invest in the blue economy / water, but there really just aren't a lot of public companies that are doing that today. I think, like, when I think about capital allocation to these solutions, it's not, okay, let's just invest in public markets and that's it, or invest in private markets or VC or philanthropy. To me, you can invest across asset classes based on what you're trying to solve for, like peatland rewetting or grassland protection. That's just squarely a philanthropic exercise. And it's going to have a huge impact on climate change, but you can't monetize that.
That's right.
Right. So, but on the other side of it is all the things that we're talking about.
So, and I think that you run into with a lot of like water funds that you
Yeah.
play into, you run into the problem of water privatization,
Yes, absolutely. That's huge right now.
which is scary because
I agree.
there should be a fundamental right to access to water. And when you're buying up all the water rights across say, the American West, and trying to monetize it, people are going to have a hard time being able to either, grow food, or they're going to have a hard time just getting tap water to drink. So every guest that I have gets the last question, the same last question. And so your eyes are wide open. You see what's happening from a climate change perspective. That it's not something out of the future. It's something that's actually starting to hit now. In the face of all that, what gives you hope?
So one of my favorite books is *Sapiens* by Yuval Harari. And he talks about how human beings are one of, or the only living species on the planet that are able to take concepts that don't exist, like money is a concept that we've made up and now it exists, right?
Yeah.
And come together and actually manifest things. And you can see that time and time again from humanity that we're able to do that.
Okay.
And I do believe that we have the ability to do that with this. And I'm seeing that humanity's desire to want to do this is increasing based on all of the commitments that are being made and the capital that's being put towards and the policy that's being put towards it. And if you think about any kind of disruption in humanity, if, whether it be electricity or the digitization of our economy or the industrialization of the world, it's not without its hiccups, or it's not without dissenters or 2 steps forward, 1 step back. And that's kind of what I think that we're seeing with this. But I do believe that we still have the ability to move this forward and change things.
Excellent. Heather Beatty, thank you so much for joining me here today. It's been an absolute pleasure to connect with you. And thank you for spending a few minutes with us today. I want to remind everybody, please make sure you like this episode and that you follow us on YouTube and all of your social media outlets. Thanks again, and we will see you soon.
Thanks.